Imagine standing at a crossroads, the path before you shrouded in fog, the weight of uncertainty in the air. The choices are vast, and your next step will shape your future. Will you choose the familiar, the comfortable, the tried and true? Or will you take a leap into the unknown, into something new, uncertain, and controversial, yet potentially life-changing? This is the crossroads many face today in the world of finance, the rise of cryptocurrency, a new, unpredictable force that promises to change the future of money. But then there's the long-established stability of traditional assets, stocks, bonds, real estate, those pillars of wealth that have withstood the tests of time. The question is this: what is the future of money? Which path will lead to lasting success, and which will lead to regret? Wealth is not just about numbers on a screen. It's about understanding the fundamental forces at play in the world, the forces that shape how we build, grow, and protect our resources. This is why, in times of uncertainty, it's essential to step back, to pause, and to ask the most important question of all us: what truly matters? The world of cryptocurrency has been compared to a wild frontier, full of promise but also fraught with danger. And while some see this new digital currency as the key to unlocking untold riches, others look upon it with skepticism and caution. But what if we take a step back and approach this debate with clarity, with a mindset rooted not in speculation, but in wisdom? You see, the true measure of wealth is not found in the volatility of the moment, nor in the excitement of new trends. Real wealth is the result of thoughtful decision-making, grounded in long-term vision, patience, and understanding. I've seen many people fall prey to the allure of quick wealth, chasing after the latest trend, hoping that the next big thing will solve all their problems. But it doesn't work that way. History is filled with stories of people who thought they had it all figured out, only to watch it unravel before their eyes. But it's also filled with stories of those who, despite the noise, remained patient, remained focused, and ultimately built something enduring. This is the choice we face today. Do we chase the quick highs and lows of cryptocurrency, or do we invest in the tried and true assets that have proven their worth over time? It's easy to get swept up in the excitement. The headlines scream about overnight success stories, the astronomical gains that can turn small investments into fortunes. But what happens when the bubble bursts? When the excitement fades and all that's left is uncertainty? The question is not if it will happen, but when. Let me tell you something I've learned over the years. Wealth is not about predicting the future. It's about understanding it, understanding the forces at play, the patterns that repeat, and the principles that endure. And the principle that's most important in times of uncertainty is patience is the key to lasting success. When you look at traditional assets, you see a history of patience. Real estate, for instance, doesn't give you overnight returns, but over time it builds. Stocks, despite their fluctuations, have proven to be an excellent long-term investment if chosen wisely. Bonds, though often seen as a safe bet, provide steady returns if held to maturity. These are the assets that have weathered the storms of economic downturns, political instability, and market crashes. Cryptocurrency, on the other hand, is a different animal altogether. Its very nature is volatile, swings in value that can make a person a millionaire one day and wipe them out the next. In many ways, it's a gambler's game, one that rewards the bold and punishes the reckless. But can it be trusted? Can we place our future in its hands? Is it wise to throw in with something so young, so untested? Many are enamored by the idea of cryptocurrency. It's fast, it's exciting, it's disruptive, but it's also incredibly risky. The blockchain technology behind cryptocurrency is brilliant. There's no denying that. It represents a new way of thinking about how money can work in the digital age. It's decentralized, transparent, and built on the idea of freedom from traditional financial institutions. But the volatility that comes with it, that's a heavy price to pay. Let's be clear. I'm not suggesting that cryptocurrency has no place in the future. There's a chance, perhaps, that it will play a pivotal role in reshaping the way we handle money, investments, and transactions. But there's another chance, a much larger one in my view, that it will be a fleeting trend like so many before it, a bubble that will eventually burst, leaving only the hard lessons learned. Real wealth is built on the foundation of sound principles. In the world of traditional assets, those principles are clear: buy low, sell high, invest with a long-term horizon, And always keep your emotions in check. With cryptocurrency, the rules are murkier. It's harder to make informed decisions because the market is still finding its place. It's a wild ride with too many unknowns. It's tempting to dive headfirst into a new and exciting opportunity. We all feel it, the rush of being on the cutting edge, of being part of something revolutionary. But here's the truth, it's not about being part of the next big thing. It's about understanding what matters and what lasts. The key to lasting wealth isn't chasing trends. It's about understanding risk, managing it, and sticking to a plan that works over time. And in my experience, this is where traditional assets truly shine. Real estate has provided wealth for generations. Stocks have consistently outperformed inflation over the long term. Bonds offer stability when the markets are volatile. These assets, while not without risk, have stood the test of time. And what do we see when we step back and look at the broader picture? We see that cryptocurrency, in its current state, is like a new toy. Exciting, yes, but unproven. It's as if everyone is scrambling to get in before the door closes, without truly understanding the game they're playing. But here's where the true challenge lies: at patience. In the rush for quick wealth, people forget that real wealth takes time. It takes discipline. It takes sticking to what you know works, rather than getting swept up in the next shiny thing. Cryptocurrency may very well be the future of money, but until it proves itself, until we see stability, regulation, and a clearer picture of its true value, the prudent course of action is to tread carefully. Real wealth doesn't come from chasing fleeting trends. It comes from understanding what truly matters and investing with a mindset that isn't swayed by the volatility of the moment. I've seen it before. People get rich quickly, only to lose it just as fast. And in the process, they lose their peace of mind, their stability, and their long-term vision. True wealth is not about chasing excitement. It's about understanding, about patience, about playing the long game. So, as we explore this debate, cryptocurrency versus traditional assets, ask yourself, are you in it for the excitement of quick returns, or are you in it for the steady, patient journey towards something lasting? The rise of cryptocurrency is a powerful symbol of our desire for something new, something different. We live in an era where change is happening faster than ever before. Technology is reshaping our lives, and the financial world is no exception. Cryptocurrency represents that break from tradition, a rebellion against the old ways, a challenge to the financial systems that have existed for centuries. It's decentralized, open source, and seemingly invincible to the forces that have brought down financial institutions in the past. But let's pause for a moment and think about this. Is change always progress? Is faster always better? The truth is, some of the greatest advancements in history were not born from rapid innovation, but from slow, steady refinement. Wealth isn't created by disruption alone. It's created by understanding the forces at play, by navigating through the turbulence with wisdom and foresight. Let's take a step back and reflect on some of the greatest fortunes ever made, the ones that have lasted generations. These fortunes were not built in the chaos of speculative bubbles. They were built on the steady, disciplined approach of long-term investing, on the understanding of real value, and on the patience to wait for it to materialize. For example, think of Warren Buffett, one of the most successful investors of all time. His wealth wasn't built overnight. It wasn't built on gambling or speculating on the next hot trend. It was built on finding undervalued businesses, buying them at a fair price, and holding onto them for the long haul. Buffett's strategy is simple, but it's based on profound wisdom. Invest in what you understand and invest for the long term. This is the core of traditional assets, the stability they offer, the ability to build wealth gradually, over time with steady, predictable returns. You don't have to be a genius to make money with traditional assets. You just have to be patient, disciplined, and willing to hold through the ups and downs of the market. The market will go up, and the market will go down, but over time, the tide rises for those who stay the course. Cryptocurrency, on the other hand, is the antithesis of stability. It's fast, it's volatile, and it's filled with risk. The crypto market is like a roller coaster, thrilling for those who can stomach the ride, but terrifying for those who can't. The value of Bitcoin, for example, can swing thousands of dollars in a single day. That's not an exaggeration. It's real. And while some people have made fortunes in that volatility, many others have lost it all. And here's the kicker. The majority of people involved in cryptocurrency aren't in it for the long term. They're in it for the quick buck, the instant gratification of making a fast profit. And this is where the danger lies. When the market is driven by emotion, by fear and greed, it's impossible to make informed decisions. It's a gamble, plain and simple. Now, don't misunderstand me. I'm not saying cryptocurrency has no potential. The technology behind it, blockchain, is revolutionary. It has the potential to change the way we think about money, about transactions, and about trust in our financial systems. The problem is, right now, the market is filled with speculation. The value of cryptocurrencies is driven by hype, not by real-world utility. People aren't investing in cryptocurrencies because they believe in their long-term potential. They're investing because they believe the price will go up. And that, my friends, is where bubbles are born. But traditional assets, they don't rely on speculation. Real estate, stocks, and bonds are rooted in tangible, fundamental value. A company's stock price reflects the value of its business. A piece of real estate represents land and property that can be used, rented, or sold. Bonds are backed by the full faith and credit of governments or corporations. These assets are tied to the real world, to actual value that can be measured and understood. And here's the key: as real wealth is built on value, not speculation. The wealthiest individuals throughout history have built their fortunes by focusing on creating and capturing value over time. They've understood the power of compounding, the power of patience, and the importance of long-term thinking. Let's take a quick look at real estate, an asset class that has created wealth for generations. It's not glamorous. It doesn't make headlines like the latest cryptocurrency craze. But for those who understand it, real estate is a powerful tool for building lasting wealth. It's a tangible asset, something you can see, touch, and improve. You can rent it out, sell it, or develop it. And over time, it tends to appreciate in value. When you invest in real estate, you're buying into something with intrinsic value. It's not about predicting the next price swing. It's about understanding the market, knowing the location, and making smart, long-term decisions. Real estate has weathered countless economic storms, from depressions to recessions to booms and busts. Yet, despite the ups and downs, it has proven to be a reliable source of wealth creation for those who take a patient, thoughtful approach. And then there's the stock market. Again, it's easy to get distracted by the daily fluctuations, the noise of the market. But over the long run, the stock market has provided substantial returns. And the best part, you don't have to be an expert to benefit. You can invest in index funds, which track the performance of the market as a whole, and still see your wealth grow steadily over time. But what does cryptocurrency offer? Speculative gains, volatility, the promise of rapid but uncertain rewards. And while some people might get lucky, most will end up paying the price when the market corrects itself. You can't build real wealth on a foundation of quick profits. You can't build wealth by hoping that the next trend will deliver. Here's the truth. True wealth is the result of understanding the fundamentals, managing risk, and taking a long-term approach. It's not about chasing the next hot thing. It's about knowing what works, staying disciplined, and being patient. And this is why traditional assets like real estate and stocks have stood the test of time. They offer stability. They offer value. They offer a path to wealth that is grounded in reality. So as you evaluate the future of money, as you decide whether to follow the siren song of cryptocurrency or to stick with traditional assets, ask yourself, what kind of wealth do you want to build? Is it wealth built on speculation, on the hope that the next big thing will make you rich? Or is it wealth built on a solid foundation of value, on the slow and steady growth of assets that have proven themselves over time? As we continue to explore the great divide between cryptocurrency and traditional assets, it's important to take a closer look at one of the most fundamental principles of wealth building, the role of risk. And I mean risk in its truest form, the kind of risk that truly tests your character, your decision-making, and your ability to endure through uncertain times. Cryptocurrency, with all its volatility, is often sold as a high-risk, high-reward investment. And make no mistake, it's exactly that. The very nature of cryptocurrency is built on unpredictability, price swings that can take you from ecstasy to despair in a matter of hours. For some, this thrill is the main attraction. They see it as an opportunity to make it big, to hit a home run that will change their lives. But here's the harsh truth: that's not how wealth is built. Building real wealth requires managing risk, not gambling with it. Yes, if you look at the history of traditional assets, what you'll see is a steady, predictable accumulation of value over time. Yes, there are risks involved. There's always a risk in investing, whether it's a downturn in the stock market, a correction in real estate, or a recession that impacts bonds. But these risks are measurable, they're understandable, and they can be mitigated with knowledge, discipline, and a long-term mindset. Think about it this way: if you're investing in stocks or bonds, you're investing in businesses, in companies that have real value. There are balance sheets to analyze, revenue streams to evaluate, and management teams to assess. You can make informed decisions based on historical performance and future potential. Sure, there are external risks, economic downturns, political instability, changes in consumer preferences, but those risks are part of the system, and they can be planned for. With cryptocurrency, it's a different story. Cryptocurrency is not tethered to anything tangible. It's not tied to the performance of a business or the production of a commodity. Its value is often based on perception, sentiment, and speculative forces. The market is influenced by headlines, social media, and the opinions of a few influential figures. In fact, there have been cases where a single tweet has caused a massive swing in the value of a cryptocurrency. This is where the real danger lies. In the world of cryptocurrency, so the risk is not just in the market, it's in the very nature of the asset itself, the sex, its volatility, its lack of intrinsic value, and its susceptibility to the whims of human emotions make it inherently risky. For many investors, this is an uncomfortable truth, but it's a truth that can't be ignored. Now, don't get me wrong, I'm not saying that cryptocurrency doesn't have a future. It very well might. It's an innovative technology that could revolutionize the way we think about money. But the question is it the right place for your wealth today? If you're building wealth for the long term, for your retirement, your children's education, or your legacy, then you need to ask yourself whether the risk of cryptocurrency aligns with your goals. If you're looking for stability, if you're looking for something that will provide you with peace of mind and steady growth, then traditional assets are a far safer bet. The key to wealth building is understanding how much risk you can handle, and whether the potential rewards are worth that risk. This is why the greatest investors in history, from Buffett to Munger, have always stressed the importance of investing in businesses that have a solid foundation. The risks are manageable when you invest in something real, something that has intrinsic value, and something that you understand. So, as you look at the cryptocurrency market, ask yourself this: are you willing to risk it all for a chance at high rewards, knowing that the journey could be tumultuous and unpredictable? Or are you content with steady, measured risk, a risk that's grounded in real-world value and long-term growth? Wealth building is about the long game, not the quick gamble. When we talk about risk in the context of wealth building, we have to also talk about our uncertainty and the role it plays in our decisions. Uncertainty is a constant in life, particularly in finance. Markets rise and fall, governments change policies, and unexpected events, whether political, economic, or even natural disasters, can shake the very foundations of our investments. How do we navigate this uncertainty? What strategies do we employ to ensure that, no matter how the winds shift, our wealth continues to grow? In the world of traditional assets, uncertainty is met with there's preparation and strategy. Take real estate, for example. Yes, property values can fluctuate, especially in the short term, but over the long term, real estate has proven to be a reliable asset class. Why? Because it's backed by something tangible. Land, buildings, infrastructure, these are real-world assets that can weather uncertainty. Even during economic downturns, people still need places to live. Businesses still need places to operate, and governments still need space for public infrastructure. Real estate can be a hedge against inflation, a source of passive income, and a way to build long-term wealth. The key to navigating uncertainty in real estate is this: location, timing, and understanding the market. If you're investing in real estate, you're investing in the foundation of society. Whether it's residential, commercial, or industrial properties, you're investing in something that has a real practical use. And as long as you make informed decisions, the value of that property will increase over time, even if the market takes a temporary hit. Now, compare this with cryptocurrency. In many ways, the world of cryptocurrency is defined by unpredictability and volatility, as Bitcoin, Ethereum, and other digital currencies are driven by speculation. The price of a coin can skyrocket in a matter of days, only to plummet just as quickly. No one can predict with certainty where the market will go. And even more than that, the very existence of these currencies is tied to the technology behind them, a technology that, while brilliant, is still new and evolving. Let's be clear, the underlying blockchain technology of cryptocurrencies holds great promise. It has the potential to revolutionize financial transactions and create more efficient, decentralized systems. But as an asset class, cryptocurrencies are far less predictable than traditional investments. They don't represent ownership in anything tangible. They're not tied to the performance of a business or the production of a good. Their value is often tied to one's beliefs. The belief that the currency will continue to be used, that its value will increase, that it will be widely accepted by institutions and governments. But what happens when that belief falters? What happens when people lose faith in the system, or when governments decide to regulate or ban certain cryptocurrencies? You're left holding an asset that has no inherent value, no backing, and no foundation in the real world. In other words, you're exposed to the full force of uncertainty. With little recourse if things go wrong, this is where the difference between traditional assets and cryptocurrencies becomes most apparent as stability vs. speculation. When you invest in something like stocks or bonds, you're investing in businesses that have tangible products, services, and cash flows. You're investing in companies that are generating real value in the world. And while stock prices can certainly fluctuate, the underlying value of the company, its ability to create products and services, generate revenue, and provide jobs, remains relatively stable in the long run. Cryptocurrency, on the other hand, offers no such stability. Its value is based largely on what people think it's worth, rather than what it actually represents. Sure, Bitcoin has a limited supply, and that makes it scarce. But what happens when people lose interest or decide they no longer believe in its potential as a store of value? The entire market could collapse, leaving you with nothing more than a digital asset that's worth nothing in the real world. So, as an investor, the question becomes, hey, what kind of uncertainty are you willing to live with? Are you comfortable with the kind of speculative risk that cryptocurrency entails? Or do you prefer the relative stability of traditional assets, where the fundamentals, the things that really matter, are more predictable and less subject to the whims of market sentiment? You see, wealth building is about controlling what you can control. In the world of traditional assets, you have more control over your investment decisions. You can research companies, evaluate management teams, assess the risk of a property, or choose bonds based on their risk or reward profile. With cryptocurrency, much of this control is taken away. You're at the mercy of the market, and that's a dangerous position to be in if you're trying to build something lasting. And here's the thing, a true wealth isn't built by chasing excitement, sir. It's built by making smart, informed decisions that take into account the realities of the market and the risks involved. It's about understanding that there's uncertainty is a given, but how you respond to it is what determines your financial success. If you're looking for long-term wealth, you need to be prepared for the ups and downs of the market. You need to understand that volatility is part of the game. But you also need to remember that there's no substitute for a sound, thought-out investment strategy. You don't build lasting wealth by throwing caution to the wind. You build it by being patient, staying disciplined, and understanding the risks you're taking. As we delve deeper into this debate, cryptocurrency versus traditional assets, we must confront one of the most critical aspects of wealth building purpose. What is the ultimate purpose of building wealth? Is it simply to accumulate more money? Or is it to create something meaningful, to build a life that is fulfilling, and to make an impact in the world? This question is often overlooked in the frenzy of financial speculation. Too many people, driven by the allure of quick returns, fail to ask themselves why they are investing in the first place. Are you building wealth because you want to live a life of freedom, peace, and purpose? Or are you building wealth because you want to keep up with the Joneses, to feel validated by the size of your bank account, or to experience the thrill of instant gratification? In the world of cryptocurrency, This question is particularly relevant. Many people are drawn to cryptocurrencies because they offer the possibility of enormous profits in a short amount of time. The idea of getting rich quickly, of turning a small investment into a fortune, is seductive. But what happens when that wealth doesn't lead to fulfillment? What happens when you've gained all that you wanted and yet you still feel empty? I've seen it time and again. People chase after wealth for the wrong reasons, only to discover that it's not the money that brings satisfaction. It's the yours purpose behind the money, the intention with which it's earned and the way it's used. True wealth isn't about simply stacking up cash or accumulating assets. It's about building something meaningful, a legacy, a sense of peace, and a life of fulfillment. Think of the greatest investors, entrepreneurs, and philanthropists in history. They didn't build their fortunes for the sole purpose of amassing wealth. They built their fortunes to create impact, to change lives, to improve the world, and to leave something behind for future generations. Their wealth wasn't just a means to an end. It was a tool to fulfill a greater purpose. Traditional assets, like stocks, bonds, and real estate, tend to align more with this purpose-driven approach to wealth building. When you invest in a company, you're investing in something that provides real value to the world. You're helping to create jobs, to foster innovation, and to build something that benefits society. When you invest in real estate, you're helping to provide shelter, to create communities, and to enhance the quality of life for others. Even bonds, though they are often viewed as a safe investment, help to fund critical infrastructure, education, and health care. In these investments, there is a clear connection between wealth building and creating value. There is a sense of purpose in the process. You are contributing to something bigger than yourself. And that sense of purpose is what makes wealth building so much more fulfilling. It's what makes it worth pursuing year after year, despite the setbacks, the challenges, and the uncertainties. Now, let's contrast this with cryptocurrency. Yes, cryptocurrency has its place in the future of money. The technology behind it, blockchain, is revolutionary. It has the potential to democratize finance, to reduce reliance on traditional financial systems, and to give individuals more control over their money. But when you strip away all the buzz and the excitement, what does cryptocurrency really offer? In its current state, it's still a speculative asset driven more by hype than by intrinsic value. It's about trying to make a quick profit, not necessarily about creating value for the world. I'm not suggesting that cryptocurrency is inherently bad. Far from it. It could play a crucial role in the future of finance. But right now, many people are using it to chase after fast money, not to build lasting wealth with purpose. They're speculating on the price movements, rather than investing in the technology or the vision behind it. They're treating cryptocurrency like a game, rather than a serious investment. This is where the danger lies. When wealth building becomes about the chasey, the desire for immediate gratification, the thrill of the gamble, it's no longer about creating something meaningful. It's about filling an emptiness that can never truly be filled by money alone. So, as you evaluate your own financial journey, ask yourself, what is your purpose in building wealth? Are you doing it for the right reasons? Are you creating value, not just for yourself, but for others? Are you investing in things that will stand the test of time, that will create lasting impact, and that will provide fulfillment beyond the numbers? Traditional assets, with their focus on real world value and long-term growth, tend to align more with a purpose-driven approach to wealth building. But cryptocurrency, with all its volatility and speculation, can sometimes pull us away from that purpose. It can become a distraction, a temptation to chase after quick wealth without considering the deeper implications of our choices. Building wealth with purpose is about aligning your financial goals with your personal values. It's about choosing investments that reflect your beliefs, your priorities, and your vision for the future. It's about creating a life that is meaningful, not just financially, but personally and spiritually. The best investors understand this principle. They invest not just for the sake of money, but for the sake of building something lasting. They understand that wealth isn't an end in itself. It's a tool that can be used to create something greater, something that transcends personal gain and extends to the community, to society, and to future generations. As we near the end of this journey, it's time to reflect on the most important lesson we can draw from the contrast between cryptocurrency and traditional assets. There's the nature of true wealth. True wealth isn't just a matter of numbers or assets. It's not about how much money you have or how fast you can make it. It's about the legacy you leave behind, the impact you make on the world, and the way you live your life. When we talk about wealth, what do we really mean? Is it just about the accumulation of resources? Or is it about creating something enduring, something that adds value to society, something that provides for those who come after us? I've spent a lifetime observing the way wealth is built, the way it is preserved, and the way it is ultimately used. And one thing I've come to understand is that wealth is not just about accumulation. It's about stewardship. It's about understanding how to manage what you have, how to use it for a greater purpose, and how to ensure that it serves not only your interests, but the interests of others as well. In the world of cryptocurrency, we see wealth being generated, sometimes very quickly, sometimes very dramatically. But the question remains, is this the kind of wealth we want to build? Is this the kind of wealth that will stand the test of time? Or is it simply a product of the moment, a temporary surge in value that, like so many bubbles before it, could burst at any time? The future of money and of wealth is not just about digital currencies or speculative assets. It's about understanding the deeper forces at play in our world, the forces that govern how value is created, how risk is managed, and how wealth is preserved. True wealth is built on principles that transcend trends. These principles are grounded in stability, in patience, in long-term thinking, and in understanding the value that we create. Cryptocurrency may indeed have a role in the future of finance. It may represent a new frontier, a new way of thinking about money and transactions. But it's important to remember that as change for the sake of change is not always progress. The world of traditional assets, stocks, bonds, real estate, has endured because it is grounded in real world value. These assets are linked to things that have inherent worth, businesses that produce goods and services, land that has utility, bonds that are backed by the full faith of governments and corporations. These assets have weathered storms. They've survived wars, economic crashes, and societal upheavals. And most importantly, they've created lasting wealth, not by following the latest trend, but by adhering to sound principles, buying low, holding long, and investing in things that have proven value. So, as you stand at the crossroads of your own financial journey, as you decide whether to pursue the promise of cryptocurrency or to remain grounded in traditional assets, ask yourself, what kind of wealth do you want to build? Do you want wealth that is built on volatility, on speculation, on the excitement of quick returns and the fear of missing out? Or do you want wealth that is built on stability, on patience, and on creating something that will last for generations? In my experience, the true path to wealth lies in the latter. It lies in investing in what you understand, in building value over time, and in maintaining the discipline to stay the course even when the market is uncertain. Real wealth isn't about the thrill of the ride. It's about the quiet confidence that comes from knowing that you've made the right decisions, that you've built something that will endure, and that you've done it with purpose and integrity. The journey to lasting wealth is not a sprint. It's a marathon, a journey that requires patience, discipline, and a commitment to doing what's right, not just what's easy. It's a journey that requires you to make decisions not based on speculation, but on principles that have stood the test of time. When you invest with purpose, when you focus on building real value, and when you understand the risks involved, you are not just accumulating wealth, you are creating a foundation for a better future. You are building a legacy that will endure, one that will impact not only your life, but the lives of those who come after you. In the end, wealth is not just about how much you have, but what you do with it. The true measure of wealth is how it is used to create opportunity, to give back, and to leave a lasting impact on the world. And that is the kind of wealth that will stand the test of time. So as you navigate the ever-changing landscape of finance, remember this: wealth is not about speculation. It's about building value, creating purpose, and leaving a legacy that endures. Whether you choose to invest in traditional assets or explore the world of cryptocurrency, stay grounded in the principles that matter. Stay patient, stay disciplined, and most importantly, stay true to your purpose. Because in the end, it's not about the money you make, it's about the life you build with it. Thank you for joining me on this journey. May your path to wealth be one of wisdom, purpose, and lasting success.